Guys, it's almost the end of November as I make this video. By the time this goes on YouTube, it will be December. That's crazy how quick this year has gone. So let me share with you an update on my pie. No, not the mince pies for Christmas, the Trading 212 pie, the one I introduced you to a few weeks ago. You remember? Yeah, okay, that one. So let's get into the video. What's up guys, my name is Johnny. Welcome to Millennials with Money. I upload every Wednesday and Sunday on YouTube, giving you content to help you take control of your finances today to create a bright financial future tomorrow. If you like what you see on the channel, I'd really appreciate your help and support in reaching more people. You can do that by leaving a like on the video, subscribing and turning on notifications, and telling another millennial that this channel is where the good stuff goes down. Now, just to remind you about this pie, remember I'm investing 10 euros every week into European companies with the aim of achieving a 4% annual return based on the dividend yield of the companies that I've picked. And if you want to check out what companies are currently in the pie, you can check out the first video I uploaded a few weeks ago about the companies that I've selected for the pie and why. And I'll leave that video up here if you want to go and check that out. Now, just before I show you where the portfolio is at today, just to tell you that Deutsche Telekom and Orange are my two biggest positions. I invested my first 10 euros in both of these stocks, and now Trading 212 is trying to correct the overall allocation every time I put 10 euros in so that I can get to my target allocation. So the portfolio currently has a huge weighting in those two stocks. And I think, if I'm not mistaken, the majority of the contributions into the pie came after the good news announcement. That's to say, the good news about the potential vaccines and the news about Biden as the US president-elect, to which the market reacted really favorably. And since then, there's not been a great deal of movement, not been too much going on in the markets since that initial spike, at least in Europe anyway. The only noteworthy news story that's happened in Europe to date, I would say, is that the recovery fund set up by the EU and the European Commission was blocked by Poland and Hungary. So none of the member states can get their allocation until this is resolved. But if I'm not mistaken, I don't think the markets reacted too much to this news. So there you go. Okay, so without further ado, let's go on to Trading 212 and have a look at the portfolio and how it's doing today. Okay, so here it is, the Let's Get This Money portfolio. So as you can see, to date, we are currently at 30 euros and 52 cents. That's at market close on Friday, the 27th of November, 2020. I know it's not quite the end of November, but you know, for the sake of one day, I decided to do it today. And you can see that from the start, I'm currently up. I'm up 53 cents. That's 1.77% return on what I've invested to date. So yeah, that was about 30 euros invested, and you can see the 53 cents that I have right there. Haven't received any dividends yet. Probably some of them will start to come in the next few months as full year results are announced and companies start to make dividend announcements. So honestly, at this point, it's very early days and there's really not too much to talk about when it comes to the overall portfolio and the companies in it. You can see that there's not too many extreme values in the portfolio. But I am going to pick on a few companies where I've got some news. I can talk about some stuff that happened. So first I'm going to talk about Sage. So Sage announced their results since I first posted the pie. And their sales were up, but I think their profit was down, and this was due to that which must not be named provision for debt. And as a result, the market really didn't react too favorably for that. If we take a look at the share graph here, you can see this was the results date announcement, I believe, or thereabouts. Those shares went down 10% as a result of that announcement. But as you can see, it started to recover there. On the way back up. Perhaps investors have seen an opportunity there, an opportunity for a buy at a discount, so they've started to go back in and buy more of the stock. And it's worth noting as well that those results were just on the assets that the company will be keeping. They've excluded their Swiss arm of the business that they're going to be selling off, so that was excluded from those results and may have, of course, had an impact on those results and to how they were portrayed and seen by investors. In addition, those were the full year results for Sage, so that could have been the reason for a slightly stronger reaction to the news rather than it being kind of a quarterly announcement where there may not have been such big movement. Nevertheless, I think this is quite an overreaction. I think Sage is still a very good company, has very good future prospects, particularly now that its revenue mix is moving more and more towards cloud-based solutions. So for me, I don't see any reason to be selling the share at this point. I think the business still has really good potential. None of the fundamentals have really changed with that news announcement. Next, let's talk about National Express. Now, as you can see, this is the biggest loser at this point, 13% down already. I'm wondering what's going on there. So I went and had a look on the internet, and this is what I found out. First of all, as I mentioned, obviously the investment in National Express came, I think, after the good news announcement. So worth noting that stock had already gone up 33% on the good news announcement that week, where we found out about potential vaccines and Biden as the US president-elect. So the stock was already pretty high, and 33%, that's a pretty nice profit to cash in. So it wouldn't surprise me if a lot of investors kind of bought in low and then took their money once that stock surge happened for National Express. And there was also some news released that I think they're seeking about £500 million of financing to re-strengthen that balance sheet and to keep the company in a good financial situation. And as a result, Fitch rated that debt issuance at a BB+. So again, concerns potentially around the company's financial health, around its debt situation, now that it's taken on an extra £500 million in debt finance. Certainly a reason for some investors to get scared and walk away. But for me, having seen the balance sheet, having done my own assessment, I'm not too worried about National Express at this stage. I think the company is not going to go away anytime soon. There'll still be demand for coach services, for bus services. Just before this second wave hit, coach demand had gone up for them. I believe it was about 65% of the pre-lockdown levels. So clearly a demand for the service, and it's on the way back. There's also talk, obviously, now that routes and corridors are being opened up for Christmas, that the operator is putting on more services in the UK, and particularly looking at how to get students home for Christmas safely. Couldn't find any news about the US part of the business, but I did find that for the ALSA network in Spain that they operate, not too much good news there. Long range services down about 20%. A lot of staff on ERTE, which is furloughed. So again, a lot of workers currently not able to work due to the restrictions. But the situation here in Spain has actually gotten a lot better, so we're starting to see restrictions relaxed, at least in Madrid capital. Around the rest of the country, some places still have restrictions, depending on what the situation is there. But there is talk again that there'll be no travel restrictions around the Christmas period, so that people can get back to their home region and students can get home for Christmas. So perhaps there'll be an increase in coach traffic then. And some silver linings or some small pieces of good news for the ALSA network is that they're currently working with MasterCard to be able to enable digital payment on the coach services. And they've also secured a contract as the coach operator of Granada FC Football Club in the south of Spain. And final update I'm going to give is on Orange. Now, Orange may be the savior of this portfolio this time, maybe the reason why I'm in green, due to the large amount that I have invested in it, combined with that big increase since I invested in it. So quite a lot of good news for Orange. They've actually started rolling out their 5G network in France already. That happened a couple of weeks back. There's currently limited coverage in the country, but they're looking to go full coverage in 2021. And I saw a couple of the 5G offers that they have, quite pricey depending on where you come from, particularly compared to UK mobile contracts, maybe to Spain mobile contracts. But what they've done is they've kind of given a discount for those first 12 months, and I think they're hoping that will get customers locked in, and then after the first 12 months they will charge full price. Nevertheless, I think investors have seen this as a positive sign, and that some good future revenues could be on the way thanks to this 5G rollout. And another piece of good news is that here in Spain, Orange has secured a deal with DAZN, which is a sports broadcaster here. And the deal that they've secured with DAZN essentially means that that channel can be broadcast as part of Orange's restaurants and bars TV package. And the big deal here is that in Spain, DAZN has the rights to the Premier League. So anyone going to a bar, restaurant in the afternoon to get some lunch, to get some drinks here in Spain is probably going to be able to watch Premier League football games, given that a lot of the La Liga Spanish football games actually broadcast a lot later on in the evening. And finally, Orange were in talks with Atos, a French cloud and cybersecurity company, to try and integrate some of their business into Orange's network. But it seems that those talks have fell through and that Orange is no longer pursuing this venture. And this may have helped Orange's stock price, given that acquiring companies in a merger and acquisition typically see their share price go down upon news that they will be pursuing another company or acquiring another company. So that's kind of the portfolio, guys. Not too much to comment on at this point. As I say, it's early days, but a few things that you've seen here. You've seen how diversification works, how Orange is essentially keeping me afloat because it's a positive position and it holds a larger portion of my portfolio. You can also see how markets react to news that comes out and how in many cases that is, one, an overreaction, and two, has no long-term bearing on the company's ability to generate revenues unless it's something really major or significant, which none of the stories that I presented to you today really are. So be sure to tune in over the next couple of months. I'm sure in January we'll start to get full year announcements for some of these companies and perhaps dividend announcements as well. So I think from January things will start to get a bit interesting for this portfolio. I'm also looking to bring out an ETF pie as well, so do keep a watch out for that video. I will keep you all posted. That's all from today's video. I hope you enjoyed it. Be sure to check out the Millennials with Money social media and internet pages and also the other videos on this channel. I'll see you on the next one, and let's get this money.